My name is Derek Weyrauch. I'm the president and CEO of GT Resources. We're an exploration stage company focused on nickel copper. Our projects are in Finland and Canada.
Hayden Locke, president and CEO of Marimaca Copper. We're developing the Marimaca oxide copper project in northern Chile. We're in the final phases of permitting and definitive feasibility study in the race towards production.
Guys, really good to see you. Thanks for joining us. We're going to talk about copper. It's kind of sitting in a holding pattern at the moment. It seems back at 444 after having hit $5. So everyone got super excited. But we're still making money at these levels, aren't we, Hayden?
Yeah, I think there's a lot of groups making a lot more money than they were. And I was joking with my board probably 2 weeks ago saying, we'll all be disappointed when copper comes back to 425, but it's a completely different world to where we were 2 years ago, 3 years ago.
And what do you reckon, Derek? Is still a lot to be cheerful about?
I think there's a tremendous amount to be cheerful about. There's certainly a huge demand for copper. We're even seeing a lot more imports of scrap metal to feed smelters. So it's all good.
Right, it's all good. It's all good. Okay, so I'm gonna start with the positives, then we're going to maybe move on to some of the things that perhaps holding the market in this holding pattern at the moment. Infrastructure. China's the big seems to be the big driver of sentiment at the moment. Copper's not the only one that's been affected. I think most metals off slightly. Again, Hayden, your take on some of the factors that are going to influence the copper market in the next 2-3 years?
Yeah, I think it is largely infrastructure driven, although I have said previously that the Dr. Copper original demand drivers of copper are very important. I think infrastructure over the next 5 to 10 years, as countries invest in electrify and decarbonising, and the only way to do that is to electrify. The amount of money that needs to be spent on the grids and the amount of natural resources that will be demanded to build out those grids is pretty astounding, and China is once again leading the way.
Right, but you didn't sort of really mention the sort of OEMs, car manufacturing. Do you think that's kind of coming off? Again, some people point to that as a reason why the mood is a bit more somber.
Yeah, I think it is. Although, I think in the broader scheme of what's being achieved in terms of decarbonisation and electrification, it was always going to ebb and flow. I think the EV revolution, I think a lot of people have realised that EVs are still in their infancy and therefore come with their problems. And I think the buyers have probably taken their foot off the pedal a little bit. It doesn't change the fact that in the next 5 to 10 years, the infrastructure that will be required, if you are to have that energy revolution, will need to be invested in by the governments, and they're starting to do that. Once government policy takes shape, it's a hard ship to deviate off its course.
So that's China. And Derek, North America. I'm going to make you the North American expert in this conversation. Elections coming up. Is that the reason why things are paused, or is there sort of slight disbelief in terms of how the US finances all of this infrastructure build out?
Well, there's no doubt that the infrastructure build out is a big issue, and I think we're going to see a tremendous amount of build out because the momentum is there, and the governments do want to go through this energy transition. And even if you look at, modest forecasts that talk about EV penetration rates just hitting about 30% of the market, it's going to require a doubling of global copper output. So, whether or not I believe that, I don't know, but 30% EV penetration seems pretty realistic. But then you also need to have the infrastructure, the power lines, the charging stations, et cetera, et cetera. So, very constructive for the copper space. And, we haven't even mentioned the build out right now for AI in these data centers and the huge amount of power copper that's required for those.
Well, that's slightly that's the terrifying bit of the equation at the moment. All sorts of conversations around where this energy is going to come from or where it's going to be diverted from to do that. So just in terms of the demand, we're saying, look, fundamentally, I think we're in violent agreement. The demand is there. Supply, there's where the problem lies, surely. South America, Chile, you're in Chile at the moment, Codelco down. It seems to be a bit harder to kind of find this stuff at the right grades, at the right depths, and hit those margins. Is something going to give there, Hayden?
I can't see it giving any time in the near future, and I think that's one of the key reasons that I've said, the next 5 to 10 years is going to be a really, really interesting time to be exposed to copper. And that's primarily because although there are quite a few projects in the pipeline, the timeline to go from standing start or even a developed project and into production is many years in most cases. And so, the supply response of the industry is extremely inelastic. And if we continue to see these sorts of demand drivers coming to the fore in complementary to the original demand drivers, we're going to see, very sharp demand increases meeting inelastic supply. We hear the talk of all of the CEOs in the copper space. They're saying they need a higher incentive price. That's driven by the large scale capex blowouts of the big, complicated porphyry style projects up in the high Andes. They want to see the copper price higher before they make a decision to greenlight the expenditure to build these projects that are in the pipeline.
Right, and North America expert, Derek, we're not seeing too much coming out of the US either. It's slightly out of their hands, it seems. They're going to rely on partnerships. They're going to rely on metal traders to kind of access the copper that they're going to need. Do you foresee problems ahead?
I think there's definitely going to be some problems ahead. And the U.S. is, just like Canada, very much a NIMBY mentality. We want the commodity, we want our cell phones and all these toys, but we don't necessarily want the mine in our jurisdiction. So yes, they will have to figure out pathways to bolster the supply of copper. But without additional investment, I think there's going to be a real crunch in from a production perspective. CRU, one of the it's called the Commodities Research Unit. They recently talked about production decreasing to about 12 million tons by 2034, relative to the 22 million tons that is being produced today on a global basis. That's a huge problem on the supply side. And, we haven't even talked about an increase in demand. As part of their research, what they're talking about, and, I take these things with a grain of salt, but, they're saying over 200 copper mines are expected to run out of ore before 2035. With not enough mines or new mines in the pipeline, and that the ongoing investment in brownfield projects, these large projects, just isn't going to be sufficient to sustain things. We need to have new supply.
Right. And let's talk about the market response here. Now, clearly, there's an expectation that there's got to be one in terms of where we're at. Say 450 today. You hit $5 a couple of months ago. Some of the people we've been talking to, and certainly one on stage when I was up in Quebec, said, look, if it hits $10 tomorrow, we're 10 years too late. This is no longer about, price incentive for those that are operating today. It's for those that should have been exploring, developing, and getting the production 10 years ago. Do you think? How do you feel about that, Hayden? Do you think that's a fair comment, or is that just promotional garbage?
I think it's probably a nice catch line, but probably not reflect. Look, I think in terms of getting investment in the mining companies have to be making money in order for it to trickle down, and investors have to be making money. There will be a response as the copper price goes and sort of above $5 and stays above $5, and these big copper companies start producing significant cash flows, and investors start making money from their investments in copper. And we saw that a little bit when everyone got all excited that the copper price touched an all-time high. Not an all-time high on a real basis, by the way, just an all-time high on an absolute basis. I think the incentive price to get things moving is well below 10. I think sustained period in the fives will get a lot of people active from an exploration standpoint, but also from a development standpoint.
Okay, so don't get greedy, get producing. Right, and that's going to come from guys like yourself. We've got a junior explorer, and we've got a advanced developer in the shape of Marimaca. I mean, for you guys, it's been a sort of tough road for you guys at Marimaca, in the sense of you really couldn't have timed it worse, could you? COVID, supply chain issues, inflation, interest rates. I mean, but you've done it. You've done it. So, I mean, were there any points where you just thought, crikey, we do need that price to move to help us out?
Yeah, look, I actually think we probably could have timed it worse. We could have started construction right at the start of COVID and not locked in any of our contracts. So it could have been worse. Yeah, look, it's been some frustration that we believed this copper thematic for quite a while, and we've struggled, I think, probably because of our capital structure in some way to attract investors and get the recognition that we think we deserve. We've made our peace with that, and we're going to head down and we're going towards production as quickly as we can. And we think actually the timing almost couldn't be better. This is as good as any position we've seen for a commodity, the last 20 years, I think, including the period which sort of floated all the boats of the iron ore sector.
And not a lot of competition around at the moment either, it seems, because some didn't kind of fare those choppy waters as well as you did.
Yeah, there's very few that we think can be developed as a standalone project, and I think that's our unique selling point for investors is we can actually develop this ourselves and will do. We don't need a major partner, and we don't need to wait for those CEOs to get comfortable that the copper price is. So we're going to become a mine, and that's our objective, and that's what we're working towards at the moment.
Okay, and then for you, it's obviously slightly earlier stage. Obviously, you kind of got big project in Finland. You've got your copper nickel projects in the US. For you, how did you find the last few years, and how did you choose to navigate?
So our projects aren't in the U.S. Just to clarify, they're in Canada, in Ontario, in the Yukon. That's okay.
My fault.
No, I think access to capital is the number one issue facing the junior segment, and even the developer stage, right? When you've got all sorts of macro uncertainties with regards to inflation rates, you can put out a study and say it's going to cost me X, but is it really going to be X, or is X times some factor to increase it? Is one of the concerns on that side. But for the juniors, absolutely, there's been a more of a risk-off approach where getting sponsorship has been more difficult. There seems to be a lack of retail investors, certainly in North America, and that has hurt the space quite a bit. And our strategy has been one to assemble a portfolio of projects that can attract the interest of strategic partnership. And we were successful in doing that about a year ago. We brought Glencore in as a strategic partner. They've just increased their stake significantly. And it's just, I think, one of the steps you need to take. If you get good projects, you need funding. The market's not giving it to you. How can you get the capital to continue advance? And that was the tactic that we took. And it's worked out extremely well so far.
Right. So you're in the right part of the world. I mean, trying to sort of understand how companies now navigate all of the things that perhaps 10 years ago weren't there, like in terms of resource nationalism or environmental opposition, etc. I mean, it feels like you guys have got to kind of tread the boards slightly carefully. I mean, Derek, for you, North American, Canadian projects, is that a factor?
That's absolutely. That's partially why we are operating where we are operating. The first thing we look at is jurisdiction. Is this a place that we want to go to? And then you got to look at the subset. Canada's a pretty big place. There's certain places in Canada that are more difficult than others. So jurisdiction, environmental, you can look at a project, and if it's in the hinterland somewhere, you can just, even if you are successful with exploration, you develop a reasonable sized or a large sized resource. Perhaps it becomes an infrastructure play, and you've got another capital constraint because it's going to cost that much more capital to build all the roads, bring the power, bring the camps, etc. So these are all things that we think about when we are looking at projects. If you look at our portfolio, all of our projects are right beside a road, easy access, don't necessarily need a camp, and are in jurisdictions that have a very well-defined regulatory framework.
Right, and obviously for Marimaca, Chile went through the elections, was it last year? Constitutional conversations about rewriting the constitution, lots of politicking going on. For you guys, it seemed like business as usual in terms of what you were doing, but the market was a little bit nervous about, potential outcomes there. I mean, how did you choose to deal with all of that whilst it was going on, and what sort of problems or what opportunities did it bring you?
Yeah, I think we spent a lot of time talking to groups about how the perception didn't necessarily affect or reflect the reality from the news articles coming out of even Bloomberg, and some of these more respected names were reasonably sensationalist that didn't necessarily reflect what was going on the ground. From our perspective, there's nothing we can do to change that. We continue to engage with investors who knew Chile and were comfortable that Chile was not going through quite the revolution everyone thought it was. And I guess you just have to work a bit harder to find the capital and the supporters to continue to help you execute. Like Derek, we view jurisdiction as an incredibly important part of mining. Not necessarily meaning that you won't go somewhere, but the discount that you require to intrinsic value to go somewhere means you're looking for deep value. Whereas I think Chile, you don't necessarily need that deeper value. There's plenty of good opportunities there, and we're pretty comfortable with it now. It's going the right direction, as you say. They have a stated goal that they want to increase their copper production global as a global percentage. So they're very supportive. We're seeing a lot of positive things coming out of the reforms they're implementing from a bureaucratic and administrative perspective. So we're seeing the benefits of that now.
Okay. And what about markets for you guys? Because you're getting pretty close, Hayden, to having to think about how you fund this. And, there's still some legacy inflation issues. Obviously, they're becoming softer. US dollar strength operating in South America. How do you hedge all of that? How do you make sure the cost of capital isn't prohibitive?
We're going through that process at the moment, and I think there's two aspects of it. Number one is how do you finance the equity portion, which is traditional model, go out and raise it from institutions and funds, and that does work well, especially when you're in a jurisdiction like Canada or in Australia. There's definitely institutional money available for that. There's probably been a little bit of a risk-off attitude from the traditional institutional investors towards Chile, as an example, not as bad as some other jurisdictions, but certainly noticeable that people who aren't as familiar with Chile would be a little bit more reticent to invest. So we're focused really on strategic investors, groups that are larger capital, longer time frames, tend to have a very good understanding of Chile or other mining jurisdictions where geopolitics plays a big role, and we have been engaging with them. I think the other aspect is our company capital structure hasn't lent itself very well to the sort of institutional investors where they need to be able to trade in and out. And so that's changed our capital strategy. And then on the debt side, well, there's lots we can do. Chile is still a very well understood and well regulated and in investors, debt investors' minds, projected geopolitical environment with limited risk relative to some others. So we think there'll be lots of appetite. And I think first time in my career, I'm probably more confident that there's probably bigger things for me to worry about than the financing for this project. I think it's much more about how do we execute.
Okay. And Derek, for you, I was just thinking, obviously, again, slightly different size, slightly different stage, where you've kind of got this, I think investors call it, they've got this arbitrage going on at the moment, which is obviously the risk with sort of earlier stage projects versus the leverage. You've also got in the background in their minds were concerned about, and certainly in Canada, we've seen this kind of capital gains, change in capital gains structure there, and I guess less disposable income through various sort of tax initiatives by the Canadian government. What would you say to retail investors about why they should invest in companies like yours in that background?
It's a tough one, right? Because the inflation has been quite extreme here in Canada. We've got, if you listen to the media, massive housing crisis, large part due to the open door policy that the country has with regards to bringing in people, which obviously is also fundamentally creative for copper consumption because they have to build hundreds upon hundreds of thousands of houses. But, I think you have to parse the investor base. So a company such as ours, and let's say, plus or minus 20 million market cap, it's difficult to get institutional relevance at that size. You're not providing the institutions with a sufficient amount of liquidity and trading opportunities. So they are adverse to getting into these situations unless there's something, very unique and special in what they are seeing in the particular story. So you're really relying on smaller pools of capital, which are investors. And let's face it, it was a couple of years ago, we were talking about the cannabis thematic where everybody was making all sorts of money. So it sucked all the capital out of the junior mining space. Then we had the crypto, which has done the same thing. right now we've got a huge amount of capital being made in AI. So this is capital for the smaller investors, the high net worth individuals. They're looking for that lottery ticket, the outsized returns, and I think that's really what we have to offer as juniors. One drill hole can radically change the whole complexion of the company. So if you're taking a very disciplined approach to de-risking your projects, and you've got a drill program coming up as we do, and you're saying, look, here's the evidence, here's the detail, these are all the things we did. If you're looking for an outsized potential reward, consider us, not necessarily having to go buy some more NVIDIA.
They've done quite well. But what happens if the copper price rises? I mean, for you as an explorer, did you see the benefits of that, when it happened, a few weeks ago, or is the reality that's going to be, to the benefit of developers and producers?
Well, it's an interesting equation, because when the commodity price is cycling up and down, it does impact the price of the juniors, even though they're not going to be in production for many, many years. The average cycle now to get in production is over 16 years, irrespective of what country you're in. That's, I think, even longer than that if you're talking about North America. So, should there really be a lot of price fluctuation this week because China had a hiccup with their housing bubble there? Maybe. Fundamentally, if you're believing in the commodity and you're a long-term investor in a particular commodity or space, I think a different lens should be taken. But absolutely, the commodity fluctuation affects the share price, which affects the access to capital in the short term.
Right, and so I think the conversation has been, look, in terms of demand, we think there's a kind of tidal wave coming down the line. Supply, we feel that it's perhaps might struggle there, but Hayden's being a bit sanguine, I think, with regards to what, in terms of great expectations. Lots of people crying for high price copper. We don't need it. If you've got a good project with good margins, we don't need it. And Derek, for you, how do you summarize what you've said today?
I think in summary, copper is a long-term allocation opportunity for your portfolio. There's fundamental demand. There's opportunity to get outsized returns because of the structural situation, both on the supply and on the demand side of the equation.
Right. Okay. So if you like what you've heard today regarding copper, then perhaps both these companies have got a way for you to play it. I'm going to ask you both to maybe give us a 2-minute summary as to why investors should be investing in you. Hayden, do you want to go for it?
Well, Marimaca is a very unique development stage copper project. We are in the final throes of definitive feasibility study. We're one of the few copper projects globally that can be in production in the next 5 years. And in our view, and based on the discussions we've had today, we think the next 5 to 10 years is going to be all important for copper as we go into what is one of the most exciting commodity setups and thematics that I've seen in my career.
Yeah, with regards to us, and I'll take a very short-term investing view on this, is that we're embarking on drilling a project that we haven't drilled before. We've de-risked it. That drilling starts in July. And if you want to get exposure to potential discovery here, we might be something to consider. Again, fundamentally, the Canalask project that we are drilling, there is a historical resource there that has, very high grade nickel. They never reported the copper historically in the resource statement, so therein lies an opportunity. And if we can pull off what we're hoping to do and find some massive sulfides in the main feature of this dike over the next couple of months, I think therein lies the trading opportunity.